Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Friday the 7th of March. We're going to move on to our final chart today, which is gold. And gold was another of these charts that actually had a big move up yesterday amid Draghi's press conference from the ECB. And this sustains what has been this series of higher lows in place on the gold chart, and continues to push higher. It looks on this daily chart as though the price certainly looks like it's going to be testing this 1354.80 mark. However, I'm still concerned by these bearish divergences you've got on the RSI, which is where you've got the higher peaks on the daily price chart, you've got the lower peaks on the RSI, and the lower peaks on the stochastics. So that is a concern for me. You've got the MACD lines are not showing too much yet. There's no crossover sell signal yet on those. So still, I think this is still something just to keep in the back of your mind as this gold price pushes higher. But interestingly, I think intraday the move has begun to retrace from yesterday's highs. Yesterday's move seems to be now underway, and certainly the falling momentum indicators. You've also got crossover sell signal and falling stochastics, so that would suggest, I think, that downside pressure might be seen early in trading today. You then start to think about retracements. 38.2% Fibonacci retracement of that move higher from yesterday is around about 1344.30. 50%, which is probably the one I'm going to be looking at most, is going to be 1341.70, but that is around about that key high of 1341.50, which is the support as well. So I think that's there or thereabouts where this any sort of retracement would probably come back towards, should it take hold today. Non-farm Payrolls Friday does tend to see markets consolidate somewhat in front of the number due to the uncertainty surrounding it. Expectation of 150,000 jobs is, by all accounts, not expected to be hit. In fact, last couple of months, payrolls have disappointed, and certainly this, in inverted commas, weather-related disappointment in the data recently suggests that there could be another disappointing number of payrolls. That would, I think, result in a difficult move on difficult to predict on gold, because certainly theoretically that should be a weak number on gold should be a weak number on payrolls should be dollar negative, which is gold positive. However, I think more than that, there'd be a slight flight possibly away from risk assets, and gold price has tended to perform alongside risk assets in recent weeks, so that's, I think, something that you need to be watching out for. But certainly volatility surrounding this number that comes in at 130 today, so that could impact on this gold chart. But I think I'm still concerned, as I said, on the daily chart about the fact that you've got these bearish divergences, which leads me to think that this push higher is not got a huge amount of momentum behind it anymore, and maybe a bit of waning upside could result in some profit taking ultimately. Anyway, I wish you good luck in your trading on gold today, and I will speak to you later. In fact, next week. Thank you.